Hello everyone, today I want to discuss how to trade cryptos, and by these I mean cryptocurrencies, NFTs and DeFi products to mention a few. This is part 1 of 2. To get the benefit of this topic, I suggest you listen to the end and part 2 of 2 as well. If you are intrigued by the elevated conversation in this regard with the so-called windfall gains and tremendous losses people have made trading cryptos, then this episode is for you. Grab a seat and let's roll. I listed easy steps you should take before diving into the volatile world of the crypto market. However, be informed, the information presented here is not investment advice and should not be treated or considered as such. You must consult your investment advisor before making any investment decision. Having said that, let's go. Step 1. Before investing in the crypto market, you must research the asset or product you wish to buy. Financial losses are real. Conduct research before buying. Understand the product, ask questions, and don't buy until you find logical answers. Sometimes some logical answers may not translate to real value or financial gains. Be skeptical and cautious until you understand the product. Don't buy the hype. Don't rush in. Step 2. First, you should understand the asset fundamental. The term asset is used loosely here. Although there's a conversation and debate about whether cryptos are assets or securities, and if they can be classified as such, until a legal decision is made in this regard, either through legislation or definitive regulations by relevant authorities. It is not within the scope of our conversation today. I'm a centrist in this regard, but my opinion does not matter. Kindly do careful due diligence before parting with your money, because anyone can create crypto and offer it to the public with ulterior intent to defraud people. You should watch our video on crypto rug pulls for more on crypto scams in a nutshell. The depth of research may determine if you win or lose in the crypto space. However, research may take either of two approaches or a combination of the two. Technical analysis on the one hand and fundamental analysis on the other. The pitfalls of either approach are that cryptos rarely release the financial results of the asset or product to the market space or their investors, unlike traditional shares issued by companies and listed on the stock exchange. So, interpreting or analyzing any crypto requires more than its technical movements and more about what it offers to the marketplace. What problem does it solve? Is there any market for those ideas? How disruptive is it? And what future, if any, does it have? Will it survive government regulation? And above all, is it legal? The financial services sector has witnessed disruptive innovations over the years. While the market adapts to the changes faster, the government moves slowly to formulate legal rules to regulate innovation with the interest of investors' protection and market efficiency at heart. You can imagine how the credit card industry and electronic payment systems disrupted and improved the ease of financial transactions across borders, and how e-commerce makes it easy for you to shop from your phone. Some people think or are of the opinion that the crypto space will be this disruptive. Do you believe? Let's see. Some cryptos claim to provide futuristic solutions to problems that don't even exist, while some have excellent novel ideas. Whether those ideas will catch on is one thing yet unknown. That's why you should do your research. Technical analysis plot charts that reflect the previous upswings and downdrafts in asset prices. In doing so, an analyst tries to identify the resistance levels. The resistance level is the price level the asset has moved above within a given time frame. The assumption is that if the price moves beyond its present value, it has the potential to hit the highs or lows attained previously. Some analysts use the 200 days moving average, the candlestick, and all to time their trade execution, buy or sell. This to me takes into account the moving averages, prices, demand, and supply without taking into consideration the inherent fundamentals of the asset. It is difficult for most day traders and individuals who want to invest their disposable income in the market. The price benchmark is good, but limiting too. The question is whether a fundamental analysis is better than a technical analysis. Why technical analysis plots and takes into consideration past movement to predict future price resistance levels, depreciation or appreciation. This assumption or strategy has inherent weaknesses. A historical indication of asset price reaching a certain threshold does not, without more, suggest that it will get to that value again. Consideration must be paid to the inherent value of the asset amongst others, namely the economy, the market, and the political and regulatory landscape. Fundamental analysis perhaps takes a deeper look into the strengths and weaknesses of the asset. The fundamental analysis pays particular attention to the performance of the asset and queries how the asset is likely to perform in a given or under a prevailing economic and market conditions. Analysts look at the balance sheet of the company to identify its strengths and weaknesses, whether the company assets have good market value. They analyze the extent of the company's risk liability vis-a-vis its capital structure and earnings. Again, this type of analysis must take into consideration some of the factors mentioned above. The technical and fundamental analysis may work well in the traditional sense of the stock trading and regulated financial instruments. Using the same approach may or may not necessarily, without more, work for cryptos. That's why you must dig deeper before you buy any crypto. Stocks and companies listed in the stock exchanges are required to publish their accounts and exhibit transparency in the management of the company. So, you will find published information about the stock to conduct your research, but cryptos are not regulated and do not have the legal requirement to publish their results and accounts like traditional stocks. Do you understand and see the difficulty in using technical analysis or even the fundamental analysis to conduct a research about the crypto asset? Now let's look at the role money plays in asset prices. Liquidity is key to research. It is believed that money earns the lowest rate of return of all financial assets traded in the financial markets. The purchasing power of money is typically eroded by inflation. To retain value, people seek to invest money in different financial products and asset classes. But every investment comes with inherent risk. What if you're unable to convert the asset to money when you need money? This brings us to the issue of liquidity, and a liquid market or asset is no friend of an investor. The ease of converting the asset into cash should be paramount in your design and research. As a result, you must do a research on the liquidity or illiquidity of the crypto asset. You should look at the 24 hours, 30 days, 90 days, and 12 months trading volume and average of the asset. This will give you an indication of the demand and supply side of the crypto with the price average. Understanding the total and maximum supply of crypto is key. Lastly, you should research the total amount of crypto that will ever be in circulation in the life of the crypto. The more cryptocurrencies they mint or ship out to the marketplace, the more the erosion of the value of the crypto asset. You have to understand this. Sometimes you have some of them, they have literally released X number of cryptos, but there's no limit to the amount of crypto they are going to release. So it's very important that you research to see. Some have trillions and quadrillions tokens. And you ask yourself, what is the fundamental value of those tokens? So the more people rush in to buy, the more print or mint they release to the marketplace. It becomes a game of number or a pool, like they would say in insurance. And who wins? The people that created the cryptos win. They can rug pull you, meaning they can end the project at any time and you will lose your money. Also, elementary economics should tell you that the lower the number of supply in the marketplace, the more the demand, depending again on the fundamental of the asset. If you have a Bitcoin has limited number of coins or that will ever be minted or created in the lifetime of Bitcoin. Does Ethereum have the same? Has Ethereum told you how many coins that will ever be in existence? You have to do this research to figure it out by yourself. The more they have the capacity to print or mint coins, the more the value of the coin can be eroded over time. There may be oversupply and less demand. But when you have a good asset that has more demand than less supply, what do you think happens to it? It's elementary economics. The price will adjust to the demand in the marketplace. You need to be well tutored in this regard. You should as a matter of fact, understand the amount of coin or crypto that will ever be in circulation in the life of that crypto. This is cardinal. It's very important to your surviving and not losing your money. There are some crypto assets in the market that provide fundamental utility in the marketplace, and Ethereum is one of them. Remember, this is not a recommendation, it's not an investment advice, but you have to understand that Ethereum is like the go-to place for most of these cryptocurrencies. When you look at where they are hosted, most of them claim to be ER20. Ethereum, they are hosted on the Ethereum space. So which means Ethereum provides a place for them to come and build their crypto asset, whether it's Web3 or the DeFi, financial, whatever you would call them. Ethereum provides that outlet for them to build. So it means Ethereum has fundamental utility. But again, if those crypto assets do not survive or are killed by regulation, it also means the business model of Ethereum will not survive. But as this, you have to look at it from this context. What does the asset provide to the marketplace? You can call Ethereum the GoDaddy of so-called crypto space, where the crypto people go to build, or so-called crypto creators go to build and put up their projects. Right? Bitcoin, of course, is regarded as the gold standard of the crypto asset because of its finite supply, limited supply in the marketplace. Who are the competitors to Ethereum and who is competing with Bitcoin? I feel in the marketplace, the competition to Bitcoin is Ethereum. They are the two standard projects. But now, this is not a financial recommendation. Please take note of that. Do your research. If institutional investors are going to come into this space, where do you think they are going to play? So, it is important to understand that quality or quantity, so to speak, quantity and supply affect the price of assets. There is a lot of hype out there about some cryptos without any known fundamental. Do not buy the hype. Do not buy the hype. Crypto trading is a volatile business, unregulated, easy to create. Be careful. Do not buy the hype. In a nutshell, here is a recap on how to invest or trade crypto. Do your research, and do your research. Understand what the market has to offer, what the crypto asset has to offer. Do not bet your life income on crypto. It's a volatile world. It's an unregulated market. Thank you for listening. Like and share this video and subscribe. And remember, this is not investment advice. Thank you all for listening today. Remember, the information provided in this broadcast is not an investment advice. Please do not rely on it to make any investment or financial decision. Consult a licensed financial advisor before making a financial decision. Thank you for listening.